am AI Generated Maya. Bapodra Investments are going to cover investment trusts in this content, which is often underappreciated amongst UK investors. Some have never heard of them, whilst others do not understand how they operate or what their benefits are. Historically, investment trusts were only available to the super wealthy to invest in. Today, anyone can invest in them, but many still do not. So what is an investment trust? To explain it in a simple manner, it is very similar to an investment fund such as a unit trust or open-ended investment company. The concept of pooled investment still applies, but the main difference is that it is a quoted company and listed on the stock exchange, which a unit trust or open-ended investment company is not.
Hi, I am AI Generated Rifa. Bapodra Investments feel investment trusts are more liquid than, say, investing in land or property. Investors can pretty much buy and sell instantly using an online broker and have access to their capital far more quicker than if they sold any land or property. Investment trusts can allow an investor exposure to many asset classes like equities, property, bonds, commodities, debts, structured finance, geographical regions around the world, and various investing themes such as technology and health, to name a few. Investment trusts can be used to generate capital growth, income, or a combination of both. One key difference between investment trusts and unit trusts and open-ended investment companies is that investment trusts are closed-ended. In simple terms, this means there's a limited number of shares available. So, if any investor wanted to invest in a unit trust or open-ended investment company, the fund manager could create new units, which would enable them to invest their capital. Equally, when investors wanted to sell, the fund manager may have to sell investments, or possibly part of them, so that they can cancel some of the units.
Hi, I am AI Generated Mia, with investment trusts as they are closed-ended. If an investor wants to invest after the launch, they can only really do this if an investor wants to sell their shares. It is the stock market which decides what the price of an investment trust is, so the price can move above or below the value of the assets the investment trust holds. This is often referred to as its net asset value, or NAV. When the price is trading above the value of the assets in the fund, then it is trading at a premium. When the price is trading below, then it is trading at a discount. Some investors look to invest in investment trusts trading at a discount, whilst others use the pound cost averaging strategy and invest regularly over the long term to create wealth. Income investors may invest lump sums when prices for high-yield investment trusts are significantly lower than its average price. Now, investors can benefit from tax efficiency if they use tax-efficient wrappers like ISA and SIPs. Bapodra Investments wants to highlight one key factor, which is that investment trusts are allowed to borrow capital to invest on behalf of their investors and shareholders. This is often referred to as gearing. This is something unit trusts and open-ended investment companies cannot do. Now, this can work really well during a bull market, but has its pitfalls during a bear market. It is a form of leverage, so it can amplify gains but equally amplify losses too.
Hi, I am AI Generated Esther. Bapodra Investments feels investment trusts can offer attractive yields on dividends, which can be either reinvested or received as income. There are quite a few which can offer yields more attractive than rental income without the hassle of being a landlord. It can also be managed tax efficiently by an ISA or SIP. There is currently, at the time of this content, a tax-free dividend allowance of £500. Anything an investor receives above this, if outside of a tax-efficient wrapper, would be charged 8.75% for basic rate taxpayers. Bapodra Investments feels this is a very attractive tax rate for basic rate taxpayers. For higher rate taxpayers, it is 33.75% and 39.35% for additional rate taxpayers. Both of these are still below the standard 40% and 45% income tax rates. Bapodra Investments feels one big benefit of investing in investment trusts using an ISA is that there is no need to disclose any dividend reinvestment or income received to HM revenue and customs via a self-assessment tax return, which is correct at the time of producing this content. Bapodra Investments wants to highlight that investment trusts can hold back some dividends, which the investments generates, especially in the stronger years. They can then use this to pay its investors during the weaker years. This is a type of smoothing of payments. Bapodra Investments wants to highlight that this is something that unit trusts or open-ended investment companies cannot do.
Hi, I am AI Generated Maya. Bapodra Investments hope you found this content both interesting and useful. Please do encourage all of your friends, family, and colleagues to subscribe and press the like button. The more subscribers, views, and likes received will really help drive future content.